Now, Swedish automaker, that is Volvo, has announced it has abandoned its target to produce only fully electric cars by 2030, saying it is now expects it will also be selling some hybrid vehicles by the date. Now, the car maker blamed changing market conditions for its decision to give up a target it had announced only 3 years ago. Here are the details of this and other stories in our business roundup.
The industry faces a slowdown in demand in some major markets for electric vehicles and uncertainty due to the imposition of trade tariffs on electric vehicles made in China. Volvo, which has traditionally flaunted its environmental credentials, joins other major car makers, General Motors and Ford, which have also rolled back on their electric vehicles ambitions. Volvo now expects at least 90% of its output to be made up of both electric vehicles and plug-in hybrids by 2030. The Swedish company may also sell a small number of so-called mild hybrids, which are more conventional vehicles with limited electrical assistance. Meanwhile, China's President Xi Jinping has pledged to step up China's support to the world's fastest growing African continent with funding of nearly $51 billion, backing for more infrastructure initiatives and a promise to create at least 1 million jobs. The world's biggest two-day lender, China, showed a desire to move away from funding big-ticket infrastructure and focus instead on selling to developing economies the advanced and green technologies in which Chinese firms have invested heavily. Jinping told delegates from more than 50 African nations that the world's second-largest economy would carry out 30 infrastructure projects across the resource-rich continent and offer $50 billion in financial assistance. Elsewhere, the US dollar's decline is gaining speed as anticipated interest rate cuts by the Federal Reserve threaten to end the greenback's years-long period of strength. The dollar has fallen 5% from its 2024 highs, close to its lowest level in about a year against a basket of its peers following a sharp drop last month. The reason is an imminent drop in US interest rates. For years, a robust U.S. economy and persistent inflation kept rates far above those of other developed countries, making dollar-based assets more attractive and keeping it elevated even after the currency hit a two-decade high in 2022. Frederick Mwoki for Lunchtime News.